Good morning, all. Thank you for joining in. We'll commence the webinar now. Thank you for joining in this morning, US time and evening India time. The presentation is on India Proxy Season 2011, where we look at the annual general meetings. And subsequently, it will last about 40-45 minutes, and then we'll have a short Q&A session. I hope you are all able to hear me clearly. If there is any problem, please do chat. I have placed all of you on mute so that others are not disturbed. Okay, thank you for joining in. Let's begin with the webinar. This webinar is brought to you by InGovern Research Service, which is India's first proxy advisory firm. We started last year, and I'm your host, Sriram Subramanian. So the webinar today has 4 parts. The 2011 AGMs, we look at the annual general meetings of 2011. And then we look at the post-meeting analysis from a perspective of what all did these AGMs throw up. And we also look at what is the state of institutional activism in India. And we have a short appendix, which we just leave it. Moving to the first section, 2011 AGMs. Basically, as I told you, InGovern is India's first proxy advisory firm. We make vote recommendations. We right now have coverage for S&P CNX 500 and BSE 500, which are 2 large indices here. And the universe, because there are common stocks in these 2, so the universe covers 607 and account for more than 85% of the market cap. The meeting types, we cover AGMs, EGMs, that is extraordinary general meetings, postal ballots, and court-convened meetings. Today we are looking at largely the 2011 AGMs. Our vote recommendations are done on the basis of detailed policy guidelines that we have evolved based on Indian and international best practices. We look at each resolution and make a recommendation to vote for star or against. A for star means that shareholders are advised to seek clarifications from the company while voting for the resolution. We don't normally recommend an abstain unless data is insufficient or lack clarity to arrive at a judgment. And we, as a matter of positive engagement with the company, we send our recommendations to the company prior to the meeting. Though we don't seek their input, we just send it to the company as a one-way practice. In the next slide, we look at the month-wise breakup of 596 AGMs. There were 11 AGMs which are still yet to be announced, may happen towards the end of the year. If you see, there's a bunching of AGMs in the July to September months. So we are in October, wherein 6 AGMs are taking place. These are the 4 sort of constituents of the indices. Nifty, which is 50 stocks, Junior Nifty, which is 50 stocks, and both are subsumed within the S&P CNX 500, and BSE 500 is the other 107 stocks that are there. So in the next slide, we look at the number of resolutions that have been tabled. Total of 4,500 odd resolutions have been tabled out of this 596 AGMs. 86% of them were ordinary resolutions which required a majority voting of only 51% shareholding, and 14% were special resolutions which required supermajority voting of 75% and above. 91% were management proposed and 9% were shareholder proposed. We look into details of these shareholder proposed resolutions in a later slide. Our policy guidelines and details, we look at these AGMs and the resolutions placed across a detailed guidelines called governance radar. These are the various dimensions on which we analyze or look at the resolutions and the corporate governance in general. So we have a matrix of about 400 criteria which we have evolved. We look at board committees, management and operations, audit and accounts, shareholder rights and disclosures. Moving to the next slide, we look at some of these parameters. One of the things is contribution at board meetings. We normally vote against reappointment of directors who are seen to have not contributed to meetings and have attended less than 75% of board meetings. In case of large companies which have huge institutional holdings like Jayaprakash Associates, etc., you will notice that the EDs have attended 0%. Even companies like Hindalco, which have very huge institutional holding and which are large cap companies, the independent director has attended 0% of the meetings. In such cases, we recommend that institutional investors and shareholders in general vote against the reappointment of these directors. Mr. M.S. Banga, again, as an independent director, has attended only 14% of the meetings here. In fact, to the extent even we recommend even for a chairman that they be voted against the reappointment. The next slide is on the total number of directorships. We vote against reappointment of directors who hold more than 20 directorships. We believe that this basically places much demand on the time, and so they should hold lesser directorships and contribute to the to the meetings here, meetings of the companies that we make recommendations for. In the case of Bhushan Steel, for example, the non-executive director who is a promoter had membership of 25 companies, and these are certain other illustrative examples. Please note that these are illustrative examples. There are many more instances, so we have put this one called list not exhaustive at the bottom of the slides. Another dimension that we look for is tenure of independent directors. We vote against reappointment of independent directors who are more than 9 years on the board of companies. This, in fact, is a non-mandatory guideline with clause 49 of the listing agreement that these companies have signed with the stock exchanges. While it's non-mandatory, we believe that this is an integral part of the guidelines, corporate government guidelines, and we vote against reappointment. In fact, in India, the practice, unfortunately, is that independent directors have been on boards for more years, many more years, like Mr. DB Engineer of Zuari Agro for 29 years, in Tata Steel and Colgate Palmolive, etc., 32 years with Colgate and Tata Steel. So we have recommended a voting against these directors. Moving to the next slide, we look at the nature of independence of directors. In fact, we question whether some of these directors are independent at all, because many of these directors, like Mr. DB Engineer, is senior partner at Crawford Bailey, which is a law firm and which is a soliciting firm to the company itself. While there is a concept of materiality in India, we still believe that this is a pecuniary relationship, and this does not this compromises the independence of the director. So to that extent, we recommend a voting against these directors. In fact, to the extent wherever the independent director is also the chair of the audit committee, like Colgate-Palmolive or Zuari or Century Enka, we have in fact recommended a voting against even adoption of accounts. This is because we believe that once the chairman of the audit committee being the second most powerful person as far as the board goes, we believe that the nature of independence is compromised and even adoption of accounts should be questioned by institutional shareholders. We move to the next slide where we look at directors' compensation. We normally vote for directors' remuneration if the following are adhered. That is, if there is a clear disclosure of the remuneration policy and if we believe that it is benchmarked to industry standards. And if there is a reassessment of performance prior to renomination of directors. That is, there should be a component of the compensation which is linked to performance. The variable pay should be based on eligibility criteria. Performance metrics like attendance, qualifications, etc. should be considered. And there should be a uniform compensation structure for all non-executive directors. We have voted against these resolutions, some of these resolutions that came up. For example, with Sun Pharma, the non-executive director and son of the chairman was being paid $650,000 from Taro Pharma, a Israeli subsidiary. This we believed was not commensurate with performance, not commensurate with the experience of the individual who was just 21 years old and was appointed as a NED on the Taro Pharma, a subsidiary company. In the case of Cipla, there was a 100% increase in compensation, but the performance criteria was not specified. Similar is the case where the managing director's compensation was increased and the performance criteria was not disclosed. In this case, in the case of Reagro, we'll notice that the commission is paid only to the non-executive chairman, who was actually a promoter, but the other entities were only getting sitting fees. In the case of Hathway, an independent director, the fees was paid to the firm of which he was a partner. Okay, this we believe was a practice that should not be encouraged. So we move to the next slide where we look at a slate of resolutions. When it comes to reappointment of directors, we vote against this practice of voting directors through a single resolution. In the case of Reliance Industries, 4 directors were voted for in a single resolution. In the case of Unilever, all directors were voted for in a single resolution. These are practices that we don't recommend. We recommend that the companies place one resolution per director. When we look at a slate of resolutions, it also extends to remuneration, wherein revision of remuneration is voted for in a single resolution. In the case of Mahindra and Mahindra, 2 directors were put to their compensation was subject to revision in a single resolution. The same with Petronet LNG, where the remuneration or compensation of 3 directors were put in a single resolution. Again, we recommend, just as in the previous case, one resolution per director. We look at another parameter, which is tenure of audit firm and audit partners. Again, in India, there are no stringent guidelines on tenure of audit firm and audit partners. There is a non-mandatory best practice guideline issued by the MCA of rotation of audit partners every 3 years and rotation of the audit firm every 5 years. In India, actually, banks are subject to the Reserve Bank of India, and the auditors of banks are subject to rotation every year, every 3 years. But for non-banking companies, this is not this does not apply. But we, as a practice, are recommending that shareholders vote against reappointment of audit firms where the audit firm is more than 5 years and audit partner more than 3 years. These are some instances again. In the case of the Birla Group companies, Hindalco and Aditya Birla Nuvo, more than 12 years where the same audit firm has been looking at the accounts. These are some instances again. We go to the next slide where we look at remuneration of auditors. We vote against reappointment of audit firm if the other fees as a percentage of the total fees paid to the audit firm is very high. And also if the company has not justified or explained the reason for the other fees in the annual report or in the notice sent to the shareholders. We notice that there are any number of instances where the total the other fees is more than 20%. In the case of Sterlite, 45% of the total fees paid to the audit firm was other fees. We believe that these could be consulting fees, these could be other advisory fees, etc., which is not very clearly explained in the annual reports. And this is where we recommend voting against the reappointment of the audit firm. In the next slide, we look at some odd resolutions. In the past few slides, we looked at some of the normal or standard resolutions that are tabled. These were some odd resolutions or one-off resolutions that were tabled. In the case of Wipro, severance pay to retiring executive directors. We voted for star in this case because the company, while paying the severance pay, had given out a detailed explanation, but shareholders were still advised to raise and query the company on the need to pay the severance pay. In some cases, we have voted against, for example, approval for voluntary payment of directors appointed not to retire for life. This is not to retire is in contravention of the standard corporate governance guidelines, wherein the 1/3 of the board has to seek reappointment every year. So to that extent, if directors are appointed not to retire, that goes against standard practice and good corporate governance. Of course, in the case of Tata Elxsi, we voted for delisting from the Delhi and Bombay Stock Exchange, Bangalore Stock Exchanges. Chambal Fertilizer retention incentive, again, we have voted against this practice because the quantum was high. Similar is the case, especially when it comes to donations, where the company is seeking approval from shareholders to give donations outside of their normal charitable causes that companies normally, from a CSR perspective, these didn't seem logical, and the explanations didn't hold water. In the case of KSB Pumps, we have looked at where KSB Singapore has been appointed as a sole selling agent for exports. KSB being a German company, we looked at whether it was an arm's length distance. The sales commission was 12.5%, so we had to recommend a 4-star, but yet we suggest that shareholders raise this issue at the AGM. Interestingly, in India, as we have seen, about 400 resolutions were passed or placed as shareholder resolutions, but most were friendly resolutions. 399 of them were for appointment of director, and most of these resolutions, when we say friendly, had the consent of the management or the backing of management. One was for removal of the director. In the case of Tourism Finance Corporation of India, removal of Archana Kapoor came up as a shareholder resolution. This resolution was subsequently passed in the AGM. This was because the largest shareholder of TFCI had who had more than 40% voting rights was for this resolution. In some instances where the shareholders proposed themselves as directors, management have recommended against. There are some few instances of this happening. We look at some instances below. In the case of Ruchi Soya, Mr. Sundar Jaipuria, holding 260 shares, proposed his candidature. But at the AGM, the management have recommended against this voting for this proposal, and at the AGM he withdrew his candidature. Similar, Mr. Sundar Jaipuria seems to be a sort of a minor activist kind of a shareholder, so he has proposed his name at 3 companies. With Coal India, Mr. Ramji Lal Chaudhary had signified his intention to become a director. In India, any shareholder who owns even a single share can propose their names for a directorship, and the company has to place it in front of shareholders for a vote. Okay. In the case of Z, which is a widely held company again, Mr. Parvinder Singh Arora was director. Resolution was again unanimously disapproved. These are shareholders who have proposed themselves as directors, and the management has recommended voting against. And of course, the resolutions have, all these have not been passed at the AGMs. The other parameters that we look at is ESOPs and warrants. ESOP issue, we look at dilution, pricing, vesting period, performance, whether the ESOPs are performance based, etc. In some cases we recommend against, in some cases for and for star, all those 3 work. Wherever some cases where we have opposed or voted against is dilution of 12.5% at Oracle Financial Services. Jain Irrigation vesting can be done after a year itself. That seemed sort of not in contrary to standard ESOP issues. IFCI, where the excise price can be up to a 25% discount. So these are, we recommended a 4-star in the case of IFCI. We also look at, from a dilution perspective, issue of warrants to promoters and investors. What is the reason for issue? What is the dilution to existing shareholders? Whether the pricing is logical. So these are some instances again where we have raised it as corporate governance issues or asked shareholders to question management. We look at again in the next slide capital raising, issue of shares and debt. This is another dimension where when it comes to qualified institutional placements, while we believe that QIPs are a quick and very effective way to raise funds, we look at closely at dilution, the pricing, voting rights attached to this QIP issues. Okay. These are some instances again, especially in the case of Reliance Infrastructure. It seemed illogical that the company was seeking a QIP shareholders approval for a QIP placement just when it is already having a buyback program. It is it's actually implementing a buyback program, and it seemed illogical. So we recommended that shareholders vote against this resolution, and then suggested that the company bring a resolution forward at the time that it really needs the funds. We cannot have enabling resolutions placed in front of shareholders. That's our concept. In increase in borrowing limits, again, we look at use of funds, debt equity ratios, etc. So these are some instances where we have voted for, star, or against. We also look at some other dimensions where we may not necessarily have these may not be resolutions per se, but they have come up to our notice, and we make it a point for shareholders to raise it. Like, for example, lesser number of independent directors on boards of these companies. For part of FY 2010-11, In India, the norm is 1/3 of the number should be IDs if the chairman is independent, and 1/2 if otherwise. But there were lesser number of IDs than mandated in these companies. In fact, PSL did not have a chairman as of 31st March. So these are observations, and we suggest that shareholders raise it at company meetings. The board size, we also again note the board size. In the case, there are some instances where there are lesser number of directors, especially Anil Ambani group companies. Reliance Communications, Power Capital have 5, 5, and 6. There are a few instances where there are higher number of directors. JP Associates is one large cap company which has 20 directors. We typically recommend 7 to 16 directors because we believe this adds to diversity of views and yet ensures that every director is contributing effectively to board meetings. The other observations which we normally look at from a CG perspective is whether nominee directors of financial institutions are considered IDs. In India, it's still a debate. We consider nominee directors of financial institutions as non-independent directors. We also look at whether the chairman and CEO or the chairman and managing director are the same individual. There are no guidelines or no regulatory requirements in India, but we recommend that the chairman and the managing director be two different individuals. We also note instances where there are no chairman, equal commissions paid to NEDs. We look closely at related party transactions. Again, the nature of the related party transaction, the quantum of the related party transaction, and the need for such a related party transaction. So these are the dimensions of the related party transaction which we look at. We also ask shareholders to pull up companies when accounts of subsidiaries or associate companies are consolidated without them being audited. There are any number of instances where these happen, but we recommend to shareholders to pull up the companies to ensure that at least in future the accounts of subsidiaries and joint ventures and associates are audited while they are consolidated with the parent company. The details of components, we have already seen this. Audit fees, no performance criteria, again our role of directors mentioned in the letter of appointments. So if there is no limit on the perquisites paid to directors, we say that companies put a cap on or at least define as to what is the nature of these perquisites. If relatives of directors are appointed, we look at it very, very closely. These are observations, these are notings that we make in our vote recommendations. This sort of brings to close the 2011 AGMs, the various resolutions that were placed, and the vote recommendations that we made. We look at section 2, which is post-meeting analysis from a perspective of what happened at these 596 meetings. The current practices in India is voting happens by show of hands. Proxies cannot vote in a show of hand. Proxy typically comes and votes or brings and tables only when a poll happens. Proxy can demand a poll. Okay. Which type of a shareholder can demand a poll? A poll can be demanded by any member who owns 1/10 of the voting rights, which is 10% of the shareholding, or has 50,000 rupees worth of shares. This is equivalent to about $1,000 US. This is a very nominal amount, and any shareholder could have this amount. So technically, any shareholder can demand a poll. And we expect or we suggest that institutional shareholders demand a poll. Proxy is not allowed to speak at the AGMs. Also, as we have seen, members can propose resolutions. Apart from where a shareholder can propose themselves as directors, even a single share with a single share. In other cases, members can propose resolutions if they have 1/10 of the total voting power, or there are 100 members and holding paid up capital of 1 lakh and above. This sort of seems onerous, but yet there is a legal provision to table resolutions, and companies need to send the notice 21 days prior to the meeting date to all shareholders. These are current practices when it comes to conducting and holding of AGMs and the practices at the AGMs itself. In the next slide, we look at the post-meeting analysis. Out of the 596 at most AGMs, the resolutions were put to vote by show of hands and passed unanimously, which is what is to be expected. Of course, majority of it got passed. 46 companies did not submit outcome of AGMs to the exchanges. Even when outcome was submitted, the minutes of proceedings were not given. These are practices. I think slowly companies are realizing that the outcomes or minutes have to be given, and out of the 596, this is the practice. For 31 companies, chairman of the board was not present at the AGM, which is surprising, and we suggest that shareholders raise this as an issue. For many companies, the audit committee chair was also not present at the AGM. This is again a practice that we don't recommend. We recommend that companies bring their audit committee chairman and make them the chairman of the board as well as the audit committee chair should be present at the AGM. In many AGMs, shareholders did not ask queries on any resolution. That's a sad part, where activism or even pulling up management or asking questions is not seen. And in the next slide, we look at attendance of directors and shareholders. In the case of Orient Paper and Industries, only 2 out of the total 6 directors that Orient has were present at the AGM. In Oldtamp, only 15 members or shareholders were present and 7 proxies were present. At the other extreme, NHPC had 17,000 members present. In Triveni Engineering, the AGM was deferred by close to an hour because the chairman and other board members were not present. These are just observations of attendance. We look at voting by poll. There were a few instances where resolutions were put for vote by poll. With Emphasis Limited, which is a subsidiary of HP, the poll was called by chairman for resolution 2, 3, and 4 for dividend and re-election of after some shareholders demanded it. With Birla Corporation, again, a shareholder and a proxy holder demanded that poll be conducted for all the 6 resolutions, and it was put to vote. In Indorama, for the issue of QIP shares, this is the only instance where we have come across where an institutional shareholder, which is HDFC trustee company, and the proxy holder of that company opposed the resolution and asked for a poll. Of course, there was some dissent, and 6.11% cast against. But this is the only instance where we have come across a institutional shareholder or an institutional representative as a trustee company coming and expressing dissent. With First Source, the AGM was held on 3rd, and when one member demanded a poll, the polls were held on the subsequent business day. Again, all resolutions were put to vote and voted for with 99% votes. With Idea Cellular, resolutions 1, 4, 5, 6, and 8 were again passed by a poll. JSL Stainless Steel, again, a poll was demanded and passed. But these were instances where voting happened through poll. There were, in the next slide, we look at how shareholder activism actually has happened. There were some instances where resolutions were withdrawn because of dissent by shareholders. With KGN Industries, no minutes were submitted. Shareholders were of the view that dividend was low, and they dissented against the dividend. So the company decided not to declare a dividend and the resolution was not passed. CMAC again, remuneration to MDs in absence of profit. Shareholder raised a dissent and the chairman withdrew the proposal. With ARSS again, where enhancement of remuneration payable to directors' relatives, again shareholders dissented and 3 resolutions, 8, 9 and 10, 3 resolutions were withdrawn. These are some sporadic instances of shareholder dissent, maybe for justifiable reasons, but yet they were withdrawn by the company. We look at the next section, which is the institutional activism. In that sense of what are the developments that, or what is the environment in India for institutional activism. Domestic mutual funds have to report how they voted from FY 2010-11. So from this April 2011, they have started reporting how they voted shareholder meetings. The domestic mutual funds need to appeal to newer, longer-term sources of funds. Foreign investors, the employee provident fund, which has been allowed to again invest in equities, insurance companies again, which are longer-term sources of funds. Recently, foreign investors called QIF, qualified institutional investors, are allowed to invest directly in Indian mutual funds. This is a new development. So again, ADR and GDR holders are allowed to vote at Indian shareholder meetings. We also note that institutional holding in the Nifty 50 stocks is more than 36%, and yet, so this gives this one to institutional investors to be more active and aggressive. What are some imminent development from a perspective of greater shareholder engagement? Electronic voting is going to come up soon in India, maybe non-mandatory, but yet it would be legally possible for companies to conduct electronic voting. SEBI has proposed that the public holdings of listed companies be more than 25%. Companies which have less than 25% would mean that they need to dilute and the free float in the stock exchanges would be higher, and hopefully more institutional investors and activism would be there. Companies also need to report the voting patterns at shareholder meetings. This is a new provision, and in contrary or the other side of the coin of how institutional investors themselves report. So these are some imminent developments in the next 6 months to a year, and this should spur greater activism or greater transparency in Indian corporates. Conclusions: we believe that engagement on corporate governance between institutional shareholders or we have seen that between institutional shareholders and companies is very poor. While there is a lot of engagement between companies and institutional shareholders on financial matters, wherein analyst meets are held very often, there is very limited engagement on corporate governance between institutional shareholders and companies, which is a sad matter. Even routine corporate governance matters are ignored by companies, as we have seen, be it tenure of independent directors, be it even conflict of independence of independent directors, etc. So to that extent, tail risk remains, because unless companies take the role of independent directors and consider investor engagement from a CG perspective very seriously, the tail risk remains for institutional investors, and institutional investors need to be more active or at least engage with companies on CG matters to mitigate this tail risk. Surprisingly, India has many legal provisions, as we have seen, for greater institutional engagement and activism. As we have seen, be it a shareholder proposing their own name for directorship, or be it of tabling of resolutions, be it calling for a poll, there are legal provisions for greater institutional engagement and activism. And we hope that institutions take engagement with companies on a serious note from a CG perspective and engage positively and proactively with companies. That brings us to the end of this presentation. Please feel free to raise your hand or ask questions in chat. The questions I am happy to answer. Any questions? Please ask questions. Just leave you with some slides in the appendix where we see InGovern is India's first proxy advisory firm. We are trying to foster institutional and any questions? We look at these are appendix and they shall be shared with you. We look at the prominence of Indian markets, the ownership structures, where foreign institutional investors actually own 18%, mutual funds own 11% of the market. When comparing India with other markets, we see that even market cap wise, the Indian stock exchanges $1.2 trillion are comparable to that of Australia, half that of Shanghai, Tokyo and Hong Kong, but are much far superior to Singapore. When it comes to number of listed companies, again, BSE is of course an anomaly because of they are more than 100 years old. Sharmila, just one minute. So the question I'm asked is, when you state that SEBI asks for voting patterns to be reported, what exactly are they asking for? They are asking that the company reveal or report as to how many, what is the nature of the investor who voted for, and what percentage of votes were for or against or abstained for each resolution. So already the shareholding pattern, there is a existing this one classification, which is promoter, foreign institutional investor, domestic mutual funds, retail investors, etc. So across these classifications, how many shareholders voted? Yeah. How will that be possible with only a show of hands? That is interesting. I think they also need to think through this. This is just a board meeting of SEBI that has happened. It is not yet mandatory. Hopefully, they will realize that with a show of hands, that may not be possible, and they would need to correct that anomaly. There is one more question. Are you also tracking how many of your recommendations are acted upon by institutional investor? No. At this current juncture, we would not have an idea of how our clients or institutional investors act on. Any other questions? Just wait for a minute if any of you have questions. Thank you. Do you see institutional investors, especially domestic ones, becoming more active? In my discussions currently with the domestic investors, have not come across them wanting to be more active, and I would think it's going to be some more years or some more incidences, so to say, before they become more active. Right now, they are just sort of ticking the boxes because SEBI now mandates them to report how they voted. But I don't see them overnight, or at least being more active, unless unless there is currently there's a push. Proactively, they will not be active. Any other questions? Okay, I think looks like. Thank you for your time and effort and attending this presentation. There's a question here, can they be made more active if your recommendations are published? I mean, we of course make suggestions or recommendations to our clients and prospective institutional investors, but it is eventually up to these institutional investors to go and vote or take decisions and act on these recommendations. And we truly hope that at least our analysis casts, and this is a discussion that I have with many fund managers here and even CIOs who think that ordinary resolutions don't need their votes, but we tell them that hey, even ordinary resolutions need votes. Even dissent, to the small dissent, like we have seen some instances even in this presentation, even small dissent, wherever there is even dissent by shareholders, companies have withdrawn resolutions. So this could so one need not necessarily have to say that, hey, we will vote for all ordinary resolutions and only take a judgment on special resolutions. That is not the right attitude. So thank you all. We are happy to answer any more questions if you have today, or otherwise you are feel free to write to us, call me, or write to us. Our email addresses and phone numbers are here. Thank you for sparing your time and attending this webinar. We will send you a copy of the presentation and also hope to upload the webinar recording onto our website. Okay. Thank you all, and have a good day.